Good evening, everyone. Three things that we've been reporting recently came home to roost today: the strengthening dollar, gridlock at West Coast ports, and falling oil prices. At the center of those issues was a company almost everybody knows, UPS, and it wasn't good. Shares tumbled nearly 10%, making it the worst performing stock on the S&P 500. After the parcel shipping company, closely watched because it's viewed as a barometer of the health of the economy, warned investors to expect weak fourth quarter results. The reasons? Unfavorable currency rates, volume fluctuations because of those West Coast port disputes, and those low oil prices, well, they aren't helping as much as many believed they would. And that wasn't all. Morgan Brennan reports.
United Parcel Service delivering some bad news to investors, slashing its fourth quarter earnings forecast. The problem? UPS spent a lot of money to successfully deliver holiday packages on time and avoid a repeat of Christmas 2013 when millions of packages were delivered late. But it did so at a big hit to the bottom line. Analysts say the shipping giant overcompensated.
UPS for some time now has been using price as a weapon to try and maintain its market share versus FedEx on the ground in the U.S. One. Two, they overspent guaranteeing service. They certainly couldn't have a repeat of last year's service disaster. And so you combine those two events in which you're not really seeing any improvement in yield and you're spending ever more to deliver those packages, and you get a big earnings miss.
UPS said the added capacity was necessary to handle the, quote, extreme spike in package volume on its two busiest days. But demand was disappointing on others. That resulted in a costly decline in productivity. Also, delays at West Coast ports had an impact. But UPS also cut its guidance for the full 2015 year, citing pension costs and currency headwinds. All of this sent shares of UPS plunging 10%. But it doesn't stop there. Shares of rival FedEx fell in sympathy as well, despite the fact that FedEx reaffirmed its own fiscal 2015 forecast. So the question now, if UPS experienced slower than expected demand, where did that market share go?
We saw this happen before. Back in 2005, UPS had service issues, and in 2006, you saw outsized gains in volume by FedEx as a result. That's the way it works.
But don't rule out the Postal Service either. The USPS surpassed its own package volume forecast, setting a new holiday season record. For Nightly Business Report, I'm Morgan Brennan.